Do we get started? Hello, does this work? Does the microphone work? Super. I think in the interest of time, we'll get started while people are coming in. In Europe, we started this week celebrating, or maybe I should say memorizing, November 11th as the Day of Remembrance, putting an end to the deadliest armed conflict in history, World War I. Every year in May, Europe and many other countries in the world also celebrate the same for World War II. But despite all these celebrations and exercises of remembrance, unfortunately, the world has never stopped being at war. It's the civilians, men, women, children, families, who suffer most from the chaos and destruction of war. With microfinance, created 50 years ago to improve the individual well-being, this brings our industry, by definition, into the center of possible actions, responses, and solutions for support. It's the Middle East that has been the region of the world that suffered most from ongoing armed conflicts in the past decades. Having been involved myself for many years in the region, through my early activities at Grameen Crédit Agricole and later for years with Cerise and SPTF, I have constantly been touched and encouraged by the impressive examples of resilience, of creativity, of courage and commitment, shared in particular during the annual regional meetings of Sanabel from across the regions by the MFIs and by the microfinance networks from Yemen to Iraq, Afghanistan, Sudan, and of course Syria, Lebanon, and Palestine. And yet, despite of those examples, of all these examples of resilience and creativity, as we heard at the opening session from Rahmet Tameo, only 1% of the 25 billion asset under management of blended finance focus on MENA and North Africa. I therefore want to thank, on one hand, the government of Luxembourg to facilitate the presence of such a great delegation from the region, and in particular from Palestine, and to e-MFP to have scheduled this roundtable and this important discussion at the conference. I'm of course very honored that I was given the opportunity to moderate the discussion today, but most of all, we have the privilege of a very knowledgeable group of panelists today with an incredible practical experience that we want to share with you now in this session. And I am sure you do recognize our significant contribution to re-establish the gender balance after the high jury composition and also the previous panel that we have seen today. So let me introduce you to the speakers that will share their experience today with you. Youssef Fawaz, the Executive Director of Al-Majmour, the leading Lebanese MFI. Youssef was a founding member of the organization 30 years ago in 1996. He's also a founding member of Sanabel, the microfinance network of the Arabic countries that I just mentioned, and has served twice as its chairman of the board. To his left, Judy Jamal, the managing director of Daman for SMEs, a very particular and innovative credit guarantee scheme for Palestine that was set up 10 years ago with the support of CD, Actis, On Capital from France, COOP 57 from Spain, the Comité pour une paix juste pour le Proche-Orient, CPJPO, and the Ministry of Foreign and European Affairs from Luxembourg, and in partnership with 3 Palestinian MFIs, Akkad, Asala, and Reef. To his left, we have Rabi Daba, the CEO of the leading microfinance institution in Syria, the first microfinance bank, which was founded by the Aga Khan Agency for Microfinance as the first financial institution licensed by the Central Bank of Syria to provide microfinance services across Syria. For those in this room who have participated in this conference for a couple of years, FMFP is already known as the bank was one of the 3 finalists in the European Microfinance Award in 2015. Further to the left, we have Pranav Sridhar. I tried not to miss it, but I did. The head of sales, the head of sales for Europe and Asia for 60 decibels. 60 decibels, familiar to, I guess, most in the room, is a groundbreaking financial inclusion initiative using technology to listen to microfinance clients at scale. Today, 60 decibels has the largest financial inclusion data set grounded on customer voice. And as I said, 60 decibels, I think, has partnered with many here in this room. And then, last but not least, Jean-Baptiste Cousin, the partnership officer at the French investor CD, covering Lebanon and Palestine, and also Central America, Peru, and Haiti. Now, the topic of today, we want to cover two main aspects of this question of microfinance in times of war. We will look at two angles. One is the client, and the other one is, of course, the funding and the risk. But before we dive into the topic, I would like to take just a few minutes to ask our representatives from the three countries that we focus our discussions on today to remind us very briefly about the specific local context. The war has affected and distorted environments in each country in different ways. So my question to Rabi and Youssef and Judy, in a few words, what are the main challenges that came with war in your context? Maybe I start with Youssef.
Sure. Thank you, Jürgen. Well, I'd begin with a very general and self-evident observation: is wars is a man-made disaster, but unlike other disasters, the difficulty, the challenge is we don't know when it ends. An earthquake happens, a flood happens, a fire happens. We tend to see roughly when it ends, and any microfinance or other institutions can start planning the recovery. And a war could be open-ended. And like we've seen recently from Ukraine to Sudan to Gaza to Lebanon, I mean, these wars are dragging on for months and at times years on end. So that makes the difficulty and the challenge ever greater because of the need to adapt as these conflicts drag on. They impact the institutions and their clients in multiple ways. The clients, most of them, I mean, for those who fall in areas where the war happens, their lives are devastated. They may lose their homes, they may lose their places of business. And that would mean, in terms of recovery, a whole new set of investment and effort and resources to be mobilized, quite different than you would see in a particularly limited crisis. They get also into a survival mode. There is no longer any issue of securing a payment to an MFI. It is a question of putting food on the table and securing the livelihood of the family. There is displacement. They need to look for new lodging away from the places of war, which creates an issue for the MFI to track where these clients that we knew where they were before the war ended up being displaced. And sometimes they take multiple displacement because they may not settle in one particular place. So another challenge on this would be the communication with the clients. How can you ensure that you continue to communicate, talk, follow, track, wonder about their well-being, but also facing the challenge that in times of war, internet, phones may fall apart, and you may need to find alternative ways. Further complicated by the fact that sometimes, in our case in particular, most of the loan officers that catered the portfolio of these clients were displaced themselves. So they were busy managing their own lives, so trying to find alternative lodging, taking care of their families, and at the same time, taking care of their clients. On the institution level, in our particular case, it may not apply everywhere, but the prime driving force has been to maintain operations at all costs, no matter what happens on the ground. So business continuity is the key driving force for us. One example, in the neighborhood, even though our headquarters were in Beirut and the war was happening in the south and the Bekaa, but the neighborhood was flooded with refugees, and it became highly difficult for us to operate out of there. So we had to quickly find an alternative place where we moved literally our server, all our IT assets, so we can continue. We rented another place on a temporary basis outside of Beirut, away from the front line, to be able to continue operating. We had to shut down the majority of our offices, so that also, and many of them were damaged by the war. And we had about 2/3 of our staff displaced, internally displaced because of the war. So that also, we tended to mobilize a bit of our resources to assist them, find alternative lodging, find health, sometimes medicine, which they couldn't find easily, and provide them with, food assistance and whatnot. Last point, funding, as you can guess, without getting into too much detail, everything freezes, everything stops until the war ends. No one wants to talk about this discussion. Whatever funds are available are into humanitarian channels, understandably. But in our case, for example, we were in discussions for a new loan over the summer with the IFC. The war happened in the fall of 2024, and that was put on hold until the hostilities stopped.
Yeah, thanks, Joseph, for that insight into Lebanon, Judy, about Palestine.
Thank you, Jorgen. Thanks for the organizer for this important conference, because it's exposing and help Daman and our partners, MFIs, to be known. And I'd like to also to thank all our partners, we work with them to create Daman. You said 10 years, but actually we are 20 years. We start as a project, but 2015 we register as a company, not-profit company. To continue with what my colleague mentioned about the war, in our case, we are not talking about 2 years of war. We are talking about 75 years of war and displacement and refugees. Last war, which was, very aggressive, and we talk about 66,000 people have been killed, 10,000 people in Gaza have been missed, nobody knows where they are, 170,000 injured who are now disabled, and either they have lost their family or the stuff. And in West Bank, we are not far. We talk about the north of West Bank. We talk about more than 40 people have been displaced from their refugee camps. And now they lost their income, they lost their place of living. The lessons we've learned as Palestinians is this resilience, how to continue fighting, how to continue our loot, to continue supporting our people in all the cases. The story of Daman started when we feel that we are not talking about commercial risk in Palestine. We are talking about political risk and uncertainty. That's why Daman was one of the unique projects to tackle the issue of microfinance. During my attendance of the workshop the past 2 days and today, I found that people are talking about insurance. But I think what we need to talk, when we talk about microfinance, in order to let them or to support them to continue their activities in the developmental way, is to have credit guarantee fund. When we compensate a loan, defaulted loan, 80% of its outstanding balance, it means that we are supporting this family or this owner of the loan to start his developmental life and not to wait for humanitarian assistance or emergency. So that's why this is the story of Daman, is how to be resilient, how to be working in income-generating projects, and how to support the people in dignity way, not in a charity way. Because we feel that since the refugees started in 1948, all this problem of charity is going to be, a big difficulty for the future. And nowadays we know how United States and Israel are attacking the UNRWA, which was one of the tools that created by the United Nations to support the refugees, not only in health or education, social activities, and also sometimes in microfinance. So we feel that the credit guarantee fund we are working with is something essential and important for resilience and for the sustainability of our partners' microfinance institution, more than talking about charity and talking about, certain kind of waiting for humanitarian assistance. Dignity is very important. And this has obliged us as Palestinians to go for this direct of supporting development and commiserating operations.
Yeah, thanks, Judy. And we have, of course, we will dive a bit deeper when we speak about the funding and risk aspect in the second part of the discussion today. So we already have two very different situations about one concept of war. And we'll go to you, Rabbi, for Syria.
Thank you again. Good afternoon, and hello from Syria, which is now the land of hope and opportunities to everyone. Almost the challenges are the same, but, I will emphasize on a few points. For us, when the war started in 2011, so one of, two major things we have to focus on. The first one was how to keep the relationship with the clients, knowing that many of them got displaced. They changed their cities because of what happened. So keeping the relationship, with them was the major challenge for us. And the second one was about how to continue the business and keep on the business running. In Syria, during some point of time, for 18 months, most of the banks, or all the banks, they stopped lending operations. For us, in the first microfinance banks, let me say that the message we got from Aga Khan Agency for Microfinance that we have to keep on going, because the microfinance was created to work in crisis times, not in luxury times. And, for us, it was about, okay, how to go on. I can tell now, throughout the years of war, we never stopped our operations. For 15 years of war, our operations kept on going. We succeeded in that, and, we got to par 30 of almost 0%. Of course, adding to that, we had the challenges relating to the locations of the bank and how to secure it, because there the issue was we didn't know where things could start, in which city and how it could start. So it was about how to keep the safety of the location. The safety of the staff was, major for us, because at the end of the day, the staff, they are our, major key if we want to do anything. So I can tell, these are the four main challenges. And in spite of war, in spite of everything happened, again, I want to emphasize that microfinance was created to work during crisis. So we need to find solution to keep on going and serve the people.
Thanks.
Thank you.
And I can just, let's say, underline that admiration I had. I have followed First Microfinance Bank for all those years. And it's amazing how this organization has just stayed and continued. So here we have very different contexts and very different responses. And of course, we'll dive into that. Yeah. And as I said, the central aspect of all our activities, of course, are clients. They are the reasons to be for our industry. Yeah. As you all said, we need to understand client needs and then propose adapted solutions. So I would like to start that chapter about clients and the analysis of clients' needs with Pranav. Over the recent years, 60 Decibels, as I mentioned, has developed a unique approach to listen to microfinance clients at scale and become the leading research platform on client experience. You have worked in many different countries, and last year, if I remember well, in Lebanon. So my question to you, can you tell us a bit, how did you engage in client interviews in the context of war in Lebanon? And can you explain us that work, both from the angle of the specificities of the outreach or the customer access, and also, of course, related to the main findings of your work?
Absolutely, Jürgen. And first up, just a huge thank you for inviting me and 60 Decibels on this panel, because as I was listening to Rabi, Jude, and Yusuf, obviously, each of them have tremendous on-ground, in-depth experience about the challenges of the broader context, but microfinance specifically. And today I have the opportunity and the privilege to share a very specific perspective, which is that of the lived experience of borrowers of microfinance, specifically the clients of Al Majmua in Lebanon. And when we were preparing for this panel, I think the broader reflection that at 60 decibels, we've been doing this work now for coming up to 10 years. And we do this across sectors. We listen directly to the lived experience of borrowers of microfinance institutions, customers of off-grid energy companies, farmers served by agribusinesses, and more. And we've done this predominantly using local language phone interviews in about 90 plus countries around the world, predominantly East and West Africa, South and Southeast Asia, and Latin America. And unfortunately, not that much in the Middle East. We're now, over the past few years, beginning to do work and did that first project in Lebanon with Yusuf and team, a little bit in Egypt, in North Africa, and Tunisia. And our goal is to be able to really, really listen to the lived experience of communities who are otherwise underserved and underheard in how decisions get made. With that context, I think I'd love to share a few of our key lessons in terms of how we conducted this research in Lebanon and some of the findings that we had as well. So on the process side, Jürgen, I think one of the things that we learned, especially post-COVID, is that there was a tremendous power in being able to leverage mobile phones to conduct these interviews. In this particular context, that really proved something that was effective in reaching communities. And in fact, when going back to our research teams, we discovered that the response rates were actually upwards of 80%, which is very high in our context. And a part of how we achieved that was using predominantly female researchers to conduct the interviews with female respondents, something that we use across the world, but especially in this context proved very valuable. That's one. The second is that, of course, without the participation and support from Sidi, who actually introduced this idea, we were able to actually enter that market. And when I say enter that market, I mean that ultimately our ability to work in any particular context is based on trust and relationships with partners on the ground. And that's how we got introduced to Al Majmua and were able to actually get started with this work. Now, moving to the insights and the findings that we had from this research, first up, we interviewed about 279 borrowers of Al Majmua to hear about who they are, what their experience with the microfinance loans was, and the impact outcomes, as well as the challenges they experienced. And without going into all of the specifics, I did want to share some of the high-level findings. On the access side, what was fascinating was that about 7 in 10 clients reported that they were accessing a loan like this for the first time, and about 9 in 10, or 87% to be precise, reported that they couldn't find a good alternative to this loan that they were receiving. And to put this in context, the results we were seeing were in the top 20% of the Asia benchmark that we have at 60 decibels. And even that doesn't really capture the significance of that outcome, because it is an even more challenging context, as Yusuf described, in Lebanon, right? Another thing that was interesting was that when it came to impact on businesses and business income, 2 in 10 respondents reported very much increased business income, and 5 in 10, a slight increase or a slight improvement. And this was in the top 40% of the Asia benchmark, not the very best, but still very positive. And I bring that up again because one of the conversations we had when presenting the results to Al Majmua was that context is incredibly important. It's only when we have more and more data from the region that we can contextualize the results even more effectively. The last 2 things I'll say are on client protection. And honestly, even more than the impact, the thing that I was telling Yusuf about just prior to our panel was the fact that 95% of respondents reported that they strongly agree. They understand the terms, the conditions, the penalties, the interest rates of their loans. So a very high level of client and customer understanding despite an incredibly challenging context. And that was also very clear in the qualitative feedback. The one thing which is, again, and this is also to recognize the challenges that the clients are facing, we noticed that about half of clients reported there had been no change in their worry about finances because of access to the loan, and 10% reported an increase in their worries. And so I don't for a second want to paint the picture that clients were not struggling or having a tough time. And using the credit in the context of that they were in was very challenging and had positive impacts. And I know it's something that Al Majmua is looking at, which is the risk of that actually leading to more worry for them if they get the credit and aren't able to use it effectively. Now, the one last thing I'll say and pause is I was just, all of what I said, there was one way for me to capture it, I was looking to find the right, voice of a respondent to summarize it. And a 29-year-old woman who we interviewed said, I could boost my business and I had savings, which I now use in the time of war in South Lebanon. So just capturing what that meant to her as a reflection of the wider experience of the clients in that very challenging context.
Super. Thank you very much. I think that's very impressive. And also with that experience that you have on different markets is to see how you adapted to a specific contract. I must say that I asked all our panelists not to come with PowerPoints, because I thought this discussion was better to have that directly. But there are PowerPoints available, and I will ask e-MFP to download it on the sites. So if you want to have access to some of that information in a more detailed manner, of course you can reach out to any of us after this. But also we'll put the PowerPoints that you prepared on that. So thank you for that angle. I'd like to go back to you, Judy. I know Daman in Palestine has also established a social and environmental performance management system to understand the impacts on clients. So my question to you, can you tell us briefly how Daman uses that information to understand client situations and needs in Palestine?
I think it is a good question, because when we talk about resilience and we talk about supporting farmers and women and youth in the rural areas, I think we have to see the impact of the loan, not from the economical side. We have to see the social side and the environmental side, how it affects. That's why I think when we start developing the system of social environmental performance management system, we want to measure when the borrower start taking the loan in 36 months or 48 months, how the loan affect his or her life in different aspects. For example, if they have 2 rooms in the house and they have 3 rooms afterwards, or if they have 2 children go to school and one of them go to the university. During this period of the loan, we want to measure how is the importance of this loan to the social and life of the family, or the woman, or the farmer. Plus, we are interested as green and support the renewable energy, for example. If we support the family with the solar energy, with our recycling unit for water or for some kind of recycled agricultural products, this means that we are protecting the environment in a way, and at the same time, we are helping this family to become doing her or his income-generating projects. So that's why this tool is very effective, and we are working hard on it to develop it in order to become not only for the 3 MFIs we are working with them, but also with the whole microfinance institution in Palestine and all over the region, if there is a possibility to share this kind of experience, because I find it's very interesting, because when we talk about a loan, maximum in our case $10,000, we're not talking about $20,000 or $40,000. The $10,000 is something, small loan, economically is good, but at the same time, we have to see if there are some effects in social and environmental life of the borrower of that area. So that's why Daman, from the very beginning, tried to go to the small loans and not to go to the big loans, because at the end of the day, we are trying to cover as much as we can in those rural areas, and most of our target group in the MFIs are non-bankable people, means they don't have collaterals, the bank will not give them any loan, commercial banks. So that's why the MFIs, they have social agenda, and our 3 partners, MFIs, Asala, Reef, and Akkad, originally, they come from NGOs. They are not for profit. But according to the new BMO law, which is BMA Palestinian, which is like the central bank, they're obliged to register as profit companies. And they don't give shares, or they don't share the profit for the founders, but it is going to be re-injected in the capital debt. So that's why I think it's a matter of interested work to do its social and environmental aspect in what we are doing, not only commercial.
Exactly. Thanks. I come back to the 2, let's say, in the field practitioners now. You are frontline with the clients. Start with Yusuf, maybe. When we spoke about this panel, you mentioned the double impact in Lebanon of first the financial crisis and then the war. How did Majmoua manage the client relationship? And in particular, I think interesting for us, how did you adapt your offer? So you use that knowledge of the client situation and needs to adapt your value proposition for them.
Yeah. In Lebanon, I mean, the particularity of our crisis is that we also entered an open-ended economic crisis as of October 2019, when the whole financial system fell apart in the country. And to this day, it has yet to be fixed. So it's been 6 years, I mean, probably one of the longest economic crises in that sense, where I would say not even any serious attempt have been made to deal with it. And that, in some way, has had devastating impact on clients and MFIs. Very quickly, just in terms of MFIs, before the crisis, we had 9 MFIs, members of the Lebanese Microfinance Association network, operating in the country. Today, we only have 2 remaining, of Majmoua being one of the 2. But also, in terms of adapting to crisis, I think Majmoua had to go through a war back in 2006 that lasted about 34 days with Israel. So, and we kind of cut our teeth into developing skills to manage a crisis and the war-like situation. And we've developed what we call the BCP, a business continuity plan, back then that we have kept updating as the context changed. Simple things, how to make sure your MIS continues to function when there is no power, how do you have alternative power, how do you maintain internal communication with all the staff all the time, how to be able to do remote work, years before COVID hit. And we added to this during the last war of 2024, and the crisis, the cash handling capability, when the banking sector altogether simply collapsed. And we couldn't go through banks, and we learned how to, for us, an institution that has never handled cash and has always transacted with its clients through banks, we had to adapt completely to a new disbursement and repayment systems. So back to how we dealt our relationship with the clients during these periods of crisis. Let me separate. I'll say something about war and something about the crisis, and so just kind of distinct in a way, even though both are severe crises that impacted us. The war itself, the latest one, even this can be divided in 2 phases. We've had a low-intensity war that started in October 23 and lasted until September 24, when a full-scale 2.5 months war that lasted until December got into place. In the first phase, it was kind of limited geographically to the south of the country, maybe at a depth of 10 kilometers. So the whole year, Majmoua just played with redefining red lines, which are the tough areas and where we stopped operating and where we kind of stopped disbursing at least, or managed with people who were kicked out and displaced from this area. When the full war came into play, then this is what I described earlier. We had to deal with like upward of 10,000 clients being displaced and having to keep track and maintaining contact with all of them. The important thing, and I think Rabia stressed on this, throughout this period, wars, economic crisis, financial collapse, war, Majmoua never stopped operating. I think we've taken it to heart that we should do our utmost never to stop disbursing, to really show that we can stand by the clients in their moment of need. Otherwise, we see no point of being an MFI if in a moment of crisis, Majmoua would stop disbursing or would stop caring or would stop seeking. So even in the latest war, which devastation was all around us, we continued to operate in areas which we considered safe, meaning a bit further remote from the front lines. We disbursed. And that, I can tell you, had a huge impact on morale, not only of the clients who received the service, but of every other client, because they knew that Majmua is serious and committed to stand by its clients, even in their moment of most difficult need. On the crisis level, well, that also in many ways devastated the client. Many of them had to close shop. 30% of our clients went out of business within a year of the beginning of the crisis. Many of them had to sell the assets that they had so long fought to keep to be able to put food on the table. They've lost all their savings. And the Majmua, the MFI, lost also all of its capital. Just give you one quick example. We went from a portfolio of $100 million in September 2019 to $3 million a year later. In just 1 year, the fall of our portfolio, the value of its portfolio was vertiginous. So part of it is because the central bank, in its infinite wisdom, decided to keep the exchange rate to the dollar at a fixed amount, meaning we were asked to accept payment. Our loans were in dollars, and the peg before the crisis was 1,500 Lebanese pound to the dollar, while in the parallel market after the crisis, it reached 140,000 Lebanese pound to the dollar. But we and all other MFIs had to accept repayment at 1,500 Lebanese pound value of that dollar. So that, I mean, the hyperinflation, the devaluation of the currency just made our equity, $67 million, evaporate in a couple of years. Last but not least, for us, we had to, obviously, as our financial situation became very dire, we had to downsize. We had to adapt. I mean, we resisted as much as we could, but reality is reality, and financial reality imposes itself. So we went slowly through three waves of downsizing. We shut down 20 of our 30 offices, which poses a problem to our clients as well, because suddenly some communities where we were very much present had no more loan officers or no more office working in the region. So the outreach was affected, and we did our best to consolidate this. And even though without an office, we continued to work in these areas. In terms of product adaptation, if I still have some time.
Please, it's important.
All right. So in terms of the product adaptation, well, in times of war, little can be done. I mean, it's not a moment where you can tweak, but the best you could do is look for grace periods, rescheduling, just stand by your client and see how best you can manage their cash flow so they can stand back on their feet. The last thing you want is for them to be completely going under. So we did this. I mean, in the last war, and the 2006 war and the 2024 war, we did more or less the same thing. Particularity of what we did in Majmua is we did not do any blanket grace period for everyone. We literally, even though the size of our portfolio was much larger, 24, we did it on an individual, case-by-case basis. So we sat down with every client, our loan officers, and evaluated the severity of how the war had impacted them. Those who had lost a home, those who have lost a business, those who have lost family, those who have lost any source of income, etc. And based on each one's ability to repay, we developed a repayment plan with each one of them. We didn't just come in and say, okay, everyone, 5 months grace period, and that's it. We thought that was better adapted, and I think it paid off because we were able to resume the quality of our portfolio in a relatively short period of time. The portfolio at risk during 2024 went up to 30%. By July, it was back to below 1%, more than 1 day late. So significant improvement, and simply by doing that tailor-made adjustment. In the crisis, which has lasted far longer, as I said, 6 years, well, we did have to innovate, we did have to adapt. The first thing we did is we used to lend in USD. Within a month, by December 2019, we had developed a loan in local currency, in LBP, which we never had before. So we quickly shifted currency from dollars to LBP. We continued lending in this LPP, even though it stopped making any financial sense at the point, because the devaluation was happening at such a rate that how much interest rate can you charge to keep the value of your principal? And yet we felt it's better to keep the money in the hands of clients than keep it in a bank and just watch its value go down because of the devaluation. So clients could, whatever, buy some medicine with it, send the kid to school, fix something in the house. We felt that was a better use of a money that anyway we were observing in front of our eyes losing its value day in and day out. We looked for alternative markets. We felt the crisis is here, some things have changed, maybe new segments have emerged. One particular one we identified was agriculture. Agriculture in Lebanon has never been a very big sector. Much of the economic activity in Lebanon was concentrated in trades and services. With the crisis, there has been a return to agriculture and to climate-sensitive agriculture with investment in solar panels and whatnot. So this is an area where we developed an agricultural product with seasonal repayment, something we've never had. We've always had this rigid monthly payment for all our loans. Now we have a product that can adjust to the seasonality of the people in agriculture. We had to stop, obviously, SME lending. We no longer had the liquidity necessary to, we had 1,000 clients out of the 90,000 clients pre-crisis in SME. When the crisis hit and we had no longer enough money, we had to stop lending $20,000 and $25,000 loans. We stopped housing loans, but that also, both the clients were no longer interested, their priorities shifted elsewhere, no one wanted to fix an apartment. Now the issue was much more survival and business continuity. We faced huge challenges, and we continue to this day managing liquidity. At times during the crisis, we do it day by day. To this day, we still have a person in operation who checks the netting of how much we've been repaid, how much and sends to all the officers. Today, you can disperse $20,000, you can disperse $50,000, you can disperse $100,000. The banks, as I said, the financial sector made that the whole banking sector collapsed. We had to shift to alternative channels to disperse and repay. So we moved from banks to money transfer agents. Now we work through Western Union and the likes in the country to disperse and to recollect. And the last thing we had to do, which is actually a bit of a disappointment for us, was that we had to, given our difficult financial situation, we had to increase our interest rate again. We went back to what we used to charge as interest rate when we started, and we were trying to establish our financial sustainability. So we're back today to 2% per month on our loans, while at the height pre-crisis, we were between 1% to 1.3% per month, given the economies of scale that we had achieved. But today, given our scale of operation, we had to go down, go up again to a higher interest rate. And last point, because it has been key to our strategy of survival during these crises, we've had since 2005 a Department of Non-Financial Services. Part of our own commitment that providing access to capital is only part of the equation. And we always believe that providing financial literacy, business skills, vocational skills, would help debt management, would help the client better manage their finances and the loan and they get, and to avoid getting in a trap of over-indebtedness. And that is, for example, one area where during the crisis, we really shifted a lot of our efforts from, since microcredit was more difficult, one, because of lack of funds, and two, because the economic situation of the country as a whole was collapsing around us. The non-financial service department became two things. One, to continue to provide service to our clients in multiple other levels than simply access to capital. And we did continue to serve upward of 8,000 people per year by non-financial services. And two, we were able to access grants and funds from donors because, again, during the economic crisis, funding for microfinance dried up. We could no longer fundraise in a meaningful sense. But the NFS department, the non-financial service department, allowed us to bring in funds to the institution, so it helped us in our survival plan. And last but not least, we were able to absorb a number of operation staff into the NFS. So they went from being loan officers to trainers in the non-financial services, and that too helped us save about 40 jobs altogether, which is not insignificant, even though we've lost close to 300 employees through the crisis. I'll stop here.
Okay, Youssef. It's obviously a big point you have in common, saying there's no point to be an MFI if we stop at those moments. And like Al-Majmua, First Microfinance is the same. You've never stopped and you have continued. Yeah. So interesting to say that, but also to show examples of how do you translate such a noble objective concretely. Rabi, can you share us from the Syrian side? And I think it's also interesting in Syria specifically to see how First Microfinance Bank has adapted in those different phases, resilience, recovery, and reconstruction. Because in Syria, of course, the situation today is at a different level. So please share your experience.
Like for us, let me say, before the war in 2011, the key for us was about how, or to like keeping the relationship with the clients in a direct way. So it's about building a network of really good relation with the clients, which created a reference for us even throughout the war years. So for us, having the loan officers, contacting the clients, visiting them, in the field by themselves, that helped us later during the war. So during the war, what we did actually, the adaptation we did was to provide new kind of products to the clients in order to keep them in relation with the bank. Usually the microfinance banks, as you know, you provide, like what we call income-generating loans or productive loans. So for us in Syria, because of the situation at that time, we had to provide what we call now non-income-generating loans or social loans. For example, that includes loans to the clients to buy fuel for the winter or to buy food for the winter. We also helped, our clients' sons, to give them loans to buy laptops for the university or to pay the tuition fees. So that was part of the adaptation throughout the time of the war. Now, for example, the earthquake which hit Syria in 2023, what we did on that time and really paid back well, let me say, was, only contacting the clients to see if they're okay after the earthquake and if they need any support. So that for the clients left very positive impact later on. And also what we did on that time, that we didn't impose any penalty on the clients who, had delayed loans. And even what we did, we deferred the loan repayments for a period of 3 months. So that was taken by our clients that, we are looking positively at them during that tough times. Now, if you want to talk also during the time of war, one of the things which we did for the clients, for example, was providing blended financing to them in coordination with the Aga Khan Foundation. One of the major issues in Syria was the power, the electricity. So, that actually, for example, prevented students from studying at home, even prevented the farmers from getting the water required for their farms. So what we did, we provided solar panels and solar system, for example, to houses to help our clients, light their houses. We provided solar panels for them to pump the water also for their farms. So that was also one of, the tools we used to support our clients and to manage the relations with them. Now, after the collapse of the regime, we faced, let me say, an issue with the repayments because, again, a lot of people changed their places. A lot of them, they lost their jobs. So for us, what we did, we repeated the same experience, contacting 25,000 clients one by one to see where they are, how is their situation, and how we can support, without asking them for the loan installment. So that really, was really successful with us, okay? And then also what we did, we didn't impose again any penalty, any one single penny of penalty on them, okay? And that, like what we witnessed after that the repayments trend got really very well, okay? And the last thing what we did was restart the loans disbursement. Like after December 2024, all the banks, they stopped their, let me say, activities, the disbursements. For us, like we restarted our disbursements, focusing now on what we call, again, income-generating loans. And now also we are focusing on the youth, on the entrepreneurs, especially in the IT field. So, like for us, I believe the major key was the direct contact with the client, keep in touch with the clients, and also adapt and give them, like new loans which can satisfy their needs throughout the hard times they've been through. So, like for us, this is
Thanks.
how I can summarize the...
Thanks. Of course, a lot of information, but there's one kind of red line that I hear from what you speak, and that reminds me of something else, is that necessity of understanding individual client needs.
Yeah.
I remember at SPTF when COVID started, and we worked with our investor members at the SPTF network. We promoted that idea to say, use your loan managers, your client relationship managers, who don't have a job anymore because people can't come to the branches. Use them to call your clients every week, just to find out how they're doing, and to identify within your client base which are the ones that have immediate need and capacity. Agriculture, there are things that make sense and that are necessary. So that's very much, I think, aligned to of course, to use client data, but also to really break it down to very individual needs, because that allows you to adapt. And it's
And like, let me tell you a small story. It happened with us, like just 2-3 months ago. Because of the relationship with the client, one of the clients had to walk for 4 kilometers just coming to one of the branches just to tell us that, he's not able now to pay the installment for the loan. And, for us, that showed us really how the relationship with the client paid off at some time, So keeping the relationship direct, understanding the client's need is the key for the success also.
Yeah. Thank you very much.
Yeah.
If you allow me just to have a complementary idea about how we dealt with the situation during the crisis. That's why the necessity of having a credit guarantee fund is important, because Daman was able to compensate the Gaza portfolio for 3 MFIs with 600.
Yeah.
But the idea, it means that those MFIs, if they don't have this third partner who will share them with the risk, political or commercial, we will face this kind of problem.
No, that's the second part of this discussion today, really. It's one of the things, of course, is our objective, and that noble aim to say it's our mission to be there, so we want to stay there, and there are client needs, how do we serve them? But how does all of that translate into the access to funding and the risk approach? And for that funding part and risk part, I would like to pass the words to Jean-Baptiste. Managing the financial risk is, of course, vital for all actors. So from an investor standpoint, if I look at the commitment and the engagement of CD over so many years, and after all that we heard from the MFIs now, isn't there a certain misconception of risk in our industry that leads many to run away at the first signs of trouble? And how do you see and work with that at CD?
Thanks, Jürgen. Hi to everybody. That's true that sometimes funders adopt behavior like a gregarious behavior, If one of our peers decided to leave a country or to stop funding a partner, the uncommon sense is there is something rotten there. Let's leave the ship while there's still time. To our defense, sometimes there is a perfect storm and the ship sinks. With Al Majmoua, funder lost like $50 million with the financial crisis of 2019 in Lebanon. Thanks, Youssef, for that. In fact, Al-Majmoua lost nearly all their equity, and they lost more than us. I said the ship sinks, but Youssef and Al-Majmoua are still there, and they are making an amazing recovery. So maybe 2 proposals I could do. First one should be to erase the risk department in our institution. And the second one, change the brain of our investment committee. I have been member of the board of CD, so it could work for me also. I did not share these proposals with my CEO, but I think that he will be delighted. You know, humor help to cope with the situation when you're working with Palestine, Lebanon, Haiti. And I share this with the partners. No? More seriously, if we can change people, I agree with the first day, Alejandro Vasquez said, the risking working group, we have to change the perception of the risk. For instance, they told us, no, the power of Al-Majmoua and First Microfinance Bank is peanuts. It's less than 1%. How do you have those rates in such harsh context? I asked them, what is your secret? I need it for Peru and Salvador. No? And they gave me 2 kinds of answers. First, the value of human resources, good professional, they know their job. But the second one is more interesting, and it's linked to what Jürgen said. There is like a special relation, special bond, who's been built between the MFI and its clients. The MFI has been the only one during years to believe, to have faith in the clients, when there was no bank, no state to help them. As the MFI cared for the clients, now the clients cared for the MFI. And for me, it's an amazing impact indicator about how the educational and cultural change induced by a steady, professional and committee grassroots work of an MFI. You know, at the beginning of December, I will face CD investment committee for a new loan for Al-Majmoua, as if we never learned the lesson. No? And they will ask me about the risk, and I will answer, there's no MFI in my portfolio with such a low par. They survived to a war, survived to a financial crisis. So what do you want more? For CD, in those contexts, I'm referring to Palestine and Lebanon, our first strategic objective is to save, protect the tool, the engine, the core of the system. You know, as Impact Center, we don't do anything. I mean, our theory of change is through our partners. The MFI on the ground are the ones doing the job with the final beneficiaries. So I would say, Jürgen, if we want to protect clients, we must protect the MFI, the tool. You said in an interview, build a good audit system or build or train good loan officers take years, time, money, energy. And the cost of rebuilding everything would be a waste and bearable. It's easy to say, but how do you do this when you're not disbursing anymore? It's the case of Palestine for 2 years. And you have to pay wages because you can keep the people with you. You can be resilient at the beginning. You can cut off costs. You can even lower salaries, as did Al-Majmoua. But sooner or later, the MFI will need debt forgiveness from lenders because they will write off part of their portfolio. They will need recapitalization from the shareholders because equity will decrease. They will need long-term loans to give them to the engine to produce again, to make more credit, and grants for non-financial activities to keep the human resources. Al-Majmoua has a wonderful strategy to transform the loan officers in project development officers during the worst time because they want to keep the people, so they ask them to do another job with another fund to be able to keep the people. So the purpose is to keep in shape the tool because even in the Middle East of Haiti, you hope someday you will be able to back on track. People, clients need you, and the MFI needs us. The second strategic objective, which is linked to the first, for the MFI is to be ready, to take off and be there with the money, the people, the process, to be able to fulfill their mission of inclusive finance when there is the opportunity. However tenuous, maybe the opportunity, a ceasefire, we have to seize it and help people to stand again. Well, for those two strategic objectives, Impact Fund cannot bear alone the burden. We need the famous blended finance. A warning, blended finance doesn't mean slow down finance, because the public, when you're talking about public funding, they take their time. It's very long. And the situation is like an emergency. So we need them, but we have to cope with the delay, and it's a very serious issue. Everybody knows that the financial system in Palestine is collapsed. But from 2 years, there's nothing has been done. Well, they couldn't prevent a genocide, so financial system is not an issue for them. Emerging UE funds for MFI in Lebanon, in Lebanon, are still negotiated 5 years after the collapse. Okay, what we were speaking in those days, we were speaking about first loss guarantee. It seems that for Middle East, ILO has a prospect program that could be interesting. Guarantee fund, as said Jude, and Daman has a locally driven initiative by Palestinian actors, funded with grants of international cooperation, thanks to Luxembourg, but covering specific risk, the consequences of a military occupation, is interested, even if the conceptor of Daman, which are in this room, never contemplate Daman would face a genocide and the scorched land policy of Israel in Gaza. The needs are huge. But the guarantee funds can be also inside our institution. In CD, we have our own guarantee fund inside for the risky situation. And I mean, with 1 million that we spend in 10 years, we'll be able to make like a leverage of 250 million for inclusive finance. So it's a very good result of impact, and we should be able to convince donors that a guarantee fund can be a very good tool to help finance inclusive in this context. And the end, technical assistance to be with the partner now, it's very important. So, in conclusion, I would say let's be gregarious in a good way, sharing risk and even being risk lover with the appropriate tools to cope with this risk. That's good to feel empathy for the resilience of people of Syria, Lebanon, Palestine, and many other parts of the world. But they began to get tired of being resilient. Please, less admiration and more action. As said Jürgen, that's why microfinance has been created. Thank you.
Thanks. Thanks, Jean-Baptiste. And I think CD is an outstanding example of an organization that walks its talk in doing exactly that and doing it successfully.
It's not easy, but we tried.
Yeah. But if we weren't here if we were just here for easy solutions, no? None of us. And that brings me, I think, directly back to Judah, the guarantee scheme that you just mentioned, that Daman proposes for political risk in Palestine, which is there to respond exactly to that risk tolerance or maybe risk intolerance of the financial markets. Can you explain us a bit more how Daman works? And your experience so far, in particular now with the experience in Gaza with your 3 partner MFIs.
I think you need the contextual credit guarantee fund is something created because it's a need. The initiative comes from the MFIs themselves to come together to develop this credit guarantee fund. How we are working? Each beginning of the year, we sign an MOU with each MFI. We give them a ceiling, for example, $90,000 this year for the portfolio under demand. Normally, for example, if we have to see the portfolio of the 3 MFIs, we are working with them up to 30th of September 2025, we're talking about $38 million for the 3 MFIs. Under demand, we cover about 4.4 million. And this is in the normal situation when we start 2019 up to 2023, we were having 4% defaulted loans, the percentage. But when the war happened, it is moved to 100% in Gaza, of course, almost 12 or 15% in West Bank. At the same time, when we start the compensation, we start, for example, for the portfolio of Gaza, we were able to support the 3 MFIs with about $650,000 for the whole period, from 2020 up to 2025. The idea behind having this, as John Baptiste mentioned, is that this credit guarantee fund is a backbone of the MFIs, because I think if you give this MFI $200,000 for the portfolio of Gaza, which is about 1 million or 1.5 million, it's something good for them to start continue, because at least there's no repayment of the loans, there is no loan officers, there is no projects. And the MFIs, they are, committed to their staff and committed to the people and they have in Gaza, for example. Now, how to encourage them to come back to this uncertainty, to this high political risk, we keep signing those MOUs and we start covering, because normally the MOU will cover not only 1 year, it covers the time of the disbursement of the loan up to its end. If it's 36 months, if it's 48 months, it could continue like this. In case the defaulted loan was in the last period, for example, if it's 36 months, we compensate the outstanding balance of the loan. We did a portfolio risk credit guarantee fund, but at the same time, when we compensate loan by loan. Then Daman, when there's a claims coming to Daman, we have outsourcing verification tool. We are signing an agreement with an independent consultancy firm who go to the beneficiary, who start to do verification, to ask the village council, Red Cross, whatever, data information, say that this loan was defaulted because it's not a technical issue from the owner or from the borrower. It is a force majeure, something coming out of his control, which means that a political risk. Now, in our case, we couldn't say that political risk is direct. Sometimes they arrest the owner of the project or they demolish the project, but sometimes there are some indirect ways of the Israeli occupation. When we talk about now gates or closing the areas, sometimes if a farmer or if a person wants raw material to his project and he don't have the access, and he don't have the access to market his product, this means that the Israeli occupation is not only direct, it's also indirect. So that's why in our case, we do this verification, and this verification is professional enough to do this. Now, what we are facing in Palestine, we have, for example, the European Reconstruction and Development Bank. They give, for example, to a special MFI, telling them that you have 10 million euros, 2 million credit guarantee fund, and 8 million loans. So it is non-professional, this. It's a conflict of interest. How come the MFI will give a loan and compensate the defaulted loan? That's why Daman was creating a new system of professional way of dealing credit guarantee fund. In Palestine now we have 3 major credit guarantee fund: EBCGF, European Palestinian Credit Guarantee Fund, Middle East Investment Initiative, and Daman. Daman, the unique thing with Daman is that we give the credit guarantee fund directly to the MFI. But for the others, they give the credit guarantee fund to the bank who gives the MFI. So in our way, that's why we are here. We are trying here to develop this partnership in order not only for Daman, it's only for giving the MFI's partners a way of liquidity. This is very important. Plus, we can do technical assistance, but it's not sometimes essential. Now, we have a program in our program, for example, to do technical assistance during the past years. We go to the MFIs, we want to train your loan officer. They told us, what? We are not, we want to send our loan officer to collect money, not to come for training. This is the way that Daman understands this, and we shift part of our budget from the technical assistance to become part of the credit guarantee fund. And we are going to sign this for the December in order to cover another period of portfolio. This is because at this time, the MFIs will continue. There is no tool like credit guarantee fund. They will not go to Gaza.
Exactly.
And before the money created, Gaza was their decision maker from, I think, from the board of ACAD Finance. They don't go to Gaza because it's risky. But when demand comes and we compensate 80% or 60% of the outstanding balance of the loan, the risk for the MFI is 20% or 40%. Means that according to the regulation of the BMA, in their final statement, they will not consider 100% provision. They consider only 20% or 40% according to the agreement we signed with the MFI.
And that's what Jean-Baptiste said about keeping the engine going. I'm sorry, I really need to stop here because I would love to give again the word to you two guys. If you can tell us, but in a few words, because I would love to see if there were 1 or 2 questions from the audience as well. How did you, maybe I start with First Microfinance Bank, how did you stabilize your funding situation?
Okay, so...
And financing situation, yeah.
Yeah. So
I'm sorry to be very...
Okay, so before 2011, for us, as you know, like a licensed bank by the central bank, we, in addition to the deposits we get from clients, so we looked also for an opportunity to get a fund from outside as a loan. And, you know, like we had really very good progression on that time, and it was almost done, and then the war started. So that door was closed for us. So then we had to depend on ourselves with deposits, you know, from the market. What we did actually, we diversified our you know, deposit portfolio. So we have individual depositors, we have also corporate, and we have the banks. And in addition to that, also we provided, let me say, some new products and deposits in order to satisfy the client's needs. Like, for example, in Syria, most of the depositors, individual, they look for monthly income throughout their deposits. We provided some deposits with advance interest, for example. So, you know, like that was how we managed to secure our funds. And I can tell, you know, like we are enjoying a percentage of deposit loans with 160%. So that is great. Of course,
and when
now,
you say deposit of banks, that's Syrian commercial banks?
Syrian, yeah. It's all funded, you know, like by our depositors. Now, after, you know, December 2024, I can tell that the door now is again opened to discover and see how we can obtain also funds from outside the country, which I believe it will be a very important tool, you know, for us and all the MFIs working in Syria overall. Okay. So this is a quick response to the question.
Reach out. And I think, Youssef, you already mentioned a few aspects on the funding situation of Al-Majmou. Anything else you want to add on that? Or is it fine? Yes?
I mean, this is fine. I know we're running out of time. I mean, if there is anything I would like really
let's see if there's an urgent question from the audience.
Yeah.
I'm happy to take that. I see there's one. Do we have a mic or two? Do we have a microphone? Or if not, we have micros. If you wait to get one, please. And if you could just mention your name and maybe the organization and to whom you want to ask the question. And please make it a short question because we would like to get the answer. Here we have, now I think in the back. Here. No, in the back you have on the side, on the right side, please. That was the first hand up. And then up here on the front. And again, please, a short, concise question to whom, because...
Thank you. My name is Yengilo Kule from Rufi. But my reference is not Uganda, it's South Sudan, because it went through a longer war than the ones we started. But before I joined Rufi, I was with another institution where we pioneered microfinance. And when we are lending, we realized that those people who had stayed so long in conflict actually had a relief mindset. It was very difficult to lend to them. Everything they got was thinking should be relief. And even when you tell them interest becomes a problem. So repayment became a problem. Apparently those ones who were outside of the conflict were better performers and were interested in lending than the rest. So I don't know whether any of you ever experienced this in spite of maybe the longer, shorter periods of the war. Thank you.
I think it's a question to the MFIs, yeah? Any answers on that? Or
I mean,
yeah, listen.
the problematic he's mentioning is very real, of course, right? I mean, during long conflict and difficulty accessing money, the clients would tend to perceive whatever funds they receive as being grants and have. We did not face as much that, in part because we've established linkages with many international NGOs and local NGOs that provide the humanitarian works. And we've always kept that clear division with our clients that will help you go to UNHCR, will help you to go to this, will help you to get to that for a grant that will help you survive. But a loan from Al-Majmu'ah would remain a loan from Al-Majmu'ah, and we have always insisted on being repaid on this. And that clear distinction between what is humanitarian and how it can happen has helped us maintain that.
Okay, Dominique, short question, and then I also have a question here, please. So,
while listening to these very substantial inputs from Syria, Lebanon, and Palestine, we would be very much eager to see whether it wouldn't be relevant to think of a kind of regional social, financial, and inclusive finance instruments, because there are attempts and initiatives in each country, but we understand from the room that these should be reinforced, consolidated. Maybe this could be the starting point today to generate a dialogue, to work on a more regional basis to address this securitization in matters, maybe.
okay. Is it okay if we consider that mere a comment and a question, or a suggestion for?
It is a proposal for,
okay, good.
for
Yeah.
IF26.
Well noted. Please, we have a question here in front. If we can get the microphone. Thank you.
Congratulations to everyone. My name is Roberto, and my question is for Mr. Ravi Dava. I would like to know if you could share with us one of the successful stories for one of your clients, and if you have a story with for one woman client.
Yeah. You know, of course, there are like many stories we can speak about, but you know, like let me tell you one story about a lady which lives, you know, like in Masyaf area. It's like to the north of Syria somehow, you know. So that lady, you know, she has an interest in honey farming. So, you know, like she approached us, I believe, you know, like maybe 2014, 15, something like that, asking for a loan for a honey farm. Okay, she wants to buy bees and she started, you know. And I can tell you now that, you know, she has really very good farm, okay? She sells honey, you know, like in her area and even to different areas in Syria. She has sustainable work, okay? Even she has now like 2 ladies working with her, assisting her in the farm. So, you know, like this one story, we have another story of a lady which started, you know, like a diary workshop in her house. She started by her own in the suburb of Damascus. And then after a few years, you know, like she started selling this, and she has also some workers working with her. So there are a lot of stories, you know, success stories, let me say. And for us in the first microfinance banks, you know, like female borrowers represents 45% of our loan portfolio. And what we found that, you know, ladies are more, you know, like committed to repay their loans more than, you know, men. So.
Yes.
Okay. A last word, please, short.
Yeah, it's just very short. That Daman is not only credit guarantee fund. Also, we are doing what we call it lobbying and advocacy. And we are doing technical assistance. For example, now in Palestine, we are trying to do a comparative study between microfinance legal system in Morocco, Tunis, Egypt, and Jordan, and to compare it with Palestinians. Because we want to lobby this against the Palestinian Monetary Authority and against the taxation department. Because in our case, the MFIs, they are paying taxes for the salary of the staff, and they are paying salary for the profit. And at the end of the day, they are all originated from NGOs. They are not a profit making. So that's why we want to support the MFIs to go for deposit, because they don't take deposits. They are not allowed to take deposits. Only they take commercial loans, which are interest. And this work of Daman is going to help to make the environment for the microfinance institution well and very successful, not only just to give credit guarantee fund.
Exactly, thanks. Good. In the preparatory discussions, I heard one comment across the board when I was speaking to you, and if I may formulate one suggestion of a message for all of us to take home from this session. The message was that from the very beginning, microfinance was created to work in different, unusual, and let's say in difficult environments. And it has demonstrated its capacity, when done correctly, fully customer-focused, to be sustainable and hold through time. We're always drawn back into the comfortable zone of traditional business, but that's not what we're here for. So let's study and learn from those who don't run away. Who don't run away when things get complicated. And Infini proved the concept of the industry that we all are in this room here for, decided to work for. So with that, I want us to give a big applause to the panelists here. When I tried to make a timeline for this session, I told them all, I said, you have so much to say, and you have so much experience, which is incredible, and I think it's, yeah, that's really, somehow it is touching the purpose of this, of our industry. So I know it's frustrating because we can't get it all through. We are still hanging out a bit. Please feel free to ask any other questions. And again, thank you for making this session possible here, and a good end of the conference. Thanks for your time.
Thank you.
Thank you.
Thank you, Jürgen. Thank you.